The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, welcome to our Bursa Malaysia webinar. And today we are going to talk about going tactical with warrants. Okay, my name is Shen Chu, I'm the moderator for this webinar. And with me today we have Kenneth Chow, who is the head of sales and marketing of RHB Investment Bank, today online with us to share with us how we can go more tactical with investments portfolio and strategy with this investment tool called Warrants. And before we move further, just want to check if you can hear me clearly and see the webcam. If you can hear me and see the webcam, please click raise the hand button. Okay. If you can hear us, please click raise the hand button right now. Okay, I'm seeing a lot of hands. All right, so you can hear me and you can see the webcam. Thank you very much. You may put down your hands right now. All right, thank you. Now, first thing first, disclaimer. Whatever we share in this webinar is only for educational purpose. In no way that the speaker or me or Bursa Malaysia is giving you any buy or sell call for any of the stock. So whatever we discuss here is only for educational purpose. So if you decide to buy or sell anything, or you decide to trade any warrants, you do it at your own risk. Is that okay? All right, cool. So let me go to some of the our webinar series now. Bursa Malaysia, as a national stock exchange, has designed a series of webinar for all the retail investor. And number one, we have a beginner webinar series whereby it is held on every first Tuesday of the month. Okay, so we'll cover more beginner topic for new investor or for rookie investor to learn more about getting started on the stock investing. All right. So next month, on the first Tuesday of the month, we're going to talk about 7 golden rules of investment. Okay. So if you're new to investing, please join us for our next webinar. All right. If you're new to investing, you want to have more preliminary or more introductory kind of content, block your first Tuesday of the month. Okay, that's for beginners. And on second Tuesday of the month, we have this Chinese webinar series. Okay, on every second Tuesday of the month, we'll conduct the webinar in a Chinese language. Okay, on next month, we're going to talk about understanding your industry KPI. Okay, 理解您所投资行业的重点指标. So that is next in the second Tuesday of May. And lastly is we also have intermediate to advanced webinar series in this year. And today we're going to talk about going tactical with warrants. As you know, warrants is a more sophisticated investment tool. And today our expert speaker here, who is also a very experienced warrants speaker, will dissect with you what are warrants and how you can use it to achieve your financial goals with warrants. Now let me give me great pleasure to introduce our speaker today. Thank you so much for joining us, Kenneth.
Thank you, Shane.
All right, and Kenneth is has joined the investment banking industry in the year of 2007, just before the subprime mortgage crisis. So he's in this industry for 10 over years. Okay, and therefore experienced several market turbulence thereafter. And started from a risk managing background, he later learned to embrace risk and started a journey in the derivative space as a warrant trader himself. Okay, so he traded warrants, and before he moved on to sales and marketing of these structured products, he's now the head of sales and marketing in the equity derivative team from RHB Investment Bank. Okay, thank you, Kenneth, for joining us today.
Thank you.
Now, Kenneth, what are you going to cover today with us?
Okay, so today the things that I'm going to cover will be in 6 parts. Okay, first thing first, we're going to talk about the rise of demand for structured warrants. And then secondly, we talk about what are warrants, okay, what exactly are they, and how does it work. And third thing, we will go to the advantages of trading warrants. We move on then to warrant essentials, whereby those are the important things that you need to know before you trade warrants. And then fifth thing is how to stay ahead of the game. Tools and basically some things that you need to know while you trade warrants. And lastly, we will finish the session with a Q&A. If you have any questions, so I think you can ask through Shane, right?
Yeah. Right. So we'll do the Q&A in the last segment of the session. So why don't we start with the first one? How can you tell us how volatile is the market, and suddenly there's a surge in the demand for warrants?
Okay. So we talk about riding on market volatility. So what does it mean by this? Okay. So obviously, if you have been following the market, it has been a very volatile year, especially last one. In 2018, we experienced some major events like the US-China trade war, Brexit, and all supply glut that caused the market a lot of uncertainties in the market.
Precisely. Last year was a bad year for many retail investors.
Yeah. So covering from the global markets perspective, let's say S&P 500 itself lost also about 5% there last year. Closer to Asia, Shanghai stock index I think suffered more painfully. I think 27% down, and not in the slide, but Hang Seng index also lost about 12% there. And back home for Malaysia, we suffer also about 5% drop in the KLCI index. So, coupled with our uncertainties internally, right? We had our general election sometime in May last year. There's a lot of restructuring. There's a lot of changes internally. We also saw some popular shares also fall quite a bit. Like MYG and FGV actually half of their value by end of 2018. So, with all this volatility in the market, right? Does it mean that there's no goal for investment already? Right? This is one thing that we need to think about. So this year, especially this year in 2019, we are still uncertain of the direction, right? We saw the index moving up to 1,730 just 2 months ago, and now we are still trading around 1,630, right? Today probably 1,629, I think. So one thing for sure going forward is perhaps the volatility. Now, so that does not deter investors from coming in the market. What happened is that we saw some switch of investor from long-term and more towards the short-term horizon. So short-term products like structured warrants has been actually growing quite a bit. In 2018, we saw trading volume actually doubled, right, from about 3 to 4 billion a month, moving on to about 10 billion on average last year. And this year, it's still the demand is still very resilient. I think we are still seeing about 9 to 10 billion up until now.
I see. So if we had learned warrants last year during the bear market, then maybe the retail investor portfolio could be enhanced, right? Maybe there are a certain hedge they can do that.
Yeah, definitely they will have more options strategy, right? They will have more strategy in comes to investing once you know warrant, which we will go a bit more in depth later on.
All right.
So as I said, the demand for warrants has been spiking quite a bit. So if you are onto shares, right, or you have been trading shares, if you look into your trading shares trading account or shares trading app, you will notice day to day you will see warrants topping the charts. And there's a lot of demands for it. In this case, you see they have been all heavily traded on this screen. And the second thing is that what you need to know is warrants are similar like shares, right? So if you go into your Malaysian trading account, you will be able to trade warrants as well, and they are listed and traded in the just like your shares.
Yeah. So kind of tell us what are actually warrants?
Okay, so in a few simple slides, I will try to summarize what are warrants and how does it work. Okay, so let's look at this slide. A warrant actually tracks the mother share at a fraction of the price. So just like this image here, yeah, you see the small fish is actually following the big fish, where we call the big fish the mother share, and the small fish here is the warrant. So the big fish or the mother share is typically referred to the stocks that you are looking at. So your MYG, your FGV, or RHB, or Maybank shares. Yeah, But the warrants that is following the mother share, which is very dependent on the mother share's performance, actually trades at a price much lower than the share price. So in most cases, they are trading below 1 ringgit on Bursa Malaysia. And if you delve into warrants, there are two types of it, right? The call warrant and the put warrant. Excuse me. So call warrant, it follows the movement of the share price. So if the share price move up, the call warrant will also follow in tandem. Whereas put warrant, it's actually moving against or in the opposite direction of the share price. If the share price goes up, your warrant actually falls in value. And to easily differentiate these two, you can look at the stock code or the description on your screen. Okay, call warrant, you will end with a stock code where you see a name followed by a dash and a CA or a C12345. Okay, alphabetical or it can be numerical.
When do they use CA alphabet? When do they use C with numeric sequence?
The stocks, yeah, you are right, Shane. It's actually by sequence and it's actually determined by Bursa Malaysia.
Oh, yeah. Like sometimes they can come with CC or CD.
Correct. So it will be first come, first serve basis. When we apply to list this kind of warrants from Bursa Malaysia, then they will put us on the sequence. So first come, first serve, we take C, and the next one will be taking D and E and F, and so on and so forth.
So if I want to trade during a bear market, I should go for warrants which end with H.
Correct. So if you're expecting the underlying or mother share to go down, then you should be looking at some put warrants where it ends with a H, dash H, A or HH numbers. Yeah?
All right.
Okay. Now, if you look back in your trading screen, if you realize we focus more on call warrants here, okay? So let's look at your trading screen. Let's say if you like Gamuda, right? You type Gamuda on your trading screen, you will see not only the mother share, right? Where in this case you see mother share, and then followed by usually a list of warrants. And as you can see here, the light blue color on the left side of the table is your warrant name and warrant code. Right? So you have Gamuda C51, C57, so on and so forth until C63. And they are typically traded much lower, cheaper than the share price. Yeah, Gamuda share price is traded now. On this screen, it's actually $2.86, whereas the warrants price below, if you can notice, 1.5 cents, 4.5 cents, 17 cents, 10 cents, and 11 cents. Now very, very cheap, much cheaper than the share price. Now sometimes you will also see this thing called company warrant, whereby it's similar to structured warrants, but it's actually a totally different thing. Now the stock code is easily differentiated is -W. Okay, these company warrants are actually created or actually listed by the company itself. So Gamuda company warrant is listed by Gamuda. Whereas the call warrants that we are focused on today is actually all listed by the banks, typically by banks.
Can you share with us like what? Okay. Yeah, I was just about to ask this.
I'm sorry, I cut this cue. Yeah, but so basically, what are the difference between these two things? Let me show you just a few. Okay, company warrants. First thing first, we talk about conversion to mother share. So people who trade company warrants or invest in company warrants may have the intention to actually convert their holdings of warrants into the mother share. So when you have a company warrant in your hand, and then when you want the mother share instead, so you fill out a form and you pay the subscription fee, and you will be converted to the mother share. So from warrants, you'll be getting mother share. Typically, it also lasts. It will last longer, right? Both structured warrants and company warrants have a limited lifespan. Okay, but for company warrants, usually longer. They last from about 2 to 5 years. Whereby the structured warrants is actually a bit shorter. Now, third thing about company warrants is that they don't have a market maker. So what happened is that the price of the company warrant is actually driven pretty much by the demand and supply of it. Okay, so your trading volume, your bid offer quotes, and all these are based on the demand and supply to move the price of the company warrants. Now, let's look at the things that differentiates structured warrants. Okay, first thing first, as compared to company warrants, right? number one is they are cash settled. So there won't be any conversion to the mother share. So more clean and simple. At the end of the lifespan of the warrant, then they will be all cash settled. Okay, no conversion to mother share. Second thing, they are also shorter dated. Typically, they last from about 6 months to 9 months in Malaysia. Okay. Third thing, the market maker for structured warrants. So all structured warrants listed on Bursa Malaysia has a market maker to provide liquidity. So they will have to have their bid codes and offer codes all the time to maintain throughout the lifespan of the warrant. So basically, the prices of this kind of structured warrants is also actually in a way guided by the market maker. It doesn't mean that you have a high trading volume, the warrant will actually move in a certain direction. Okay, because the price actually follows the underlying share. That's the most important thing that you need to know here.
But it could be different for company warrants, right?
Correct.
Company warrants, so long that there are huge buying volume,
Correct.
then the share price could be pushed up quite
Correct.
substantially. So can you also tell us what is the reason that company warrants were issued, and what is the reason that structured warrants were issued? What were they initially intended for?
Okay, good question. So for it's not in this slide, but since Shane asked about it,
Yeah.
company warrants are usually is a tool to raise risk funds for companies itself. Okay, so if company needs some funding and all, they will have some corporate exercise to issue certain kind of like in this case like a company wants to obtain some funds. But for structured warrants, it's actually just for pure trading purposes. So bank will just issue warrants to facilitate traders out there for them to trade. Okay, so it's pretty much very short-term kind of investment here.
All right. So for company warrants, basically to raise money. Structured warrants is mainly for trading purpose.
Correct.
So that's the intention. All right.
Okay, so moving on to the next slide, where I want to talk a little bit more about the market maker here. Okay, so if you look at these two tables here, the warrant above is it's a warrant without a market maker. So how you can tell it's the bid offer is actually small, very small. So if you can see, if you want to buy, let's say if you're interested in the warrant above, you want to spend 3,000 ringgit to invest in this warrant, you can hardly fill up because on 13 cents, at 13 cents, you can only fill up about 1,000 or 2,000 ringgit worth. So you will be probably taking up the next offer price if you want to invest 3,000 ringgit in this warrant. Okay, where else at the lower table, you can see this warrant, there is a presence of market maker. The bid and offer code is huge. Right? The volume is big, 500,000 on the bid and 500,000 on the offer. Right? Despite the traded volume is small, the focus here is actually to look at the bid and offer volume of a warrant because this bid and offer volume actually determines the liquidity of the warrant, not the traded volume here. So most investors who are new to warrant will always look at the traded volume of a warrant to say that, oh, this is the good warrant because the traded volume is huge, right? So maybe something is going on, they will move the price. But for warrants, as I mentioned before, what moves the price is actually the market maker's price, the bid and offer. So a good market maker will ensure that this warrant will actually follow the share price movement.
So the first table, is it like company warrants kind of movement? Then the second table is like a structured warrants kind of movement.
Perhaps company warrants demand and supply may not always be there. So sometimes when the demand and supply dries up, it's probably something you can see up there on the first table.
Okay, so right now we've covered more about what are warrants, what is liquidity, and then so the point I get from this slide is that volume is not the main factor; it's the liquidity that's the main factor, right?
Correct.
To see how much is the volume at the bid and how much is the volume at offer. This liquidity will means a lot more to structured warrants trading.
Correct. So for warrants, in just to sum up what Shane has mentioned, the traded volume of a warrant does not equals to liquidity of a warrant. So you always look at the bid and offer for volume.
Okay, so we have covered about trading volume. Can you tell us what are the advantages of trading structured warrants?
Okay, I will cover that in the next slide. But just before I go to the next slide, one more thing I want to mention here is that something to look at is also the bid offer spread of the warrant. Right. So with market maker, the spread is always tight. So in this case, just say on the table below, 12 cents and 12 and a half. These are the tightest spread that we can go. Whereas one without a market maker, you will see probably a very wide spread. In this case, 12 cents and to jump 2 ticks away, and 13 cents is the offer. So if you have invested in this kind of warrants, you bought at 13 cents, you want to sell back at 12 cents, you will suffer
Lose one
larger.
cent.
You lose another tick there. Okay.
Yeah, because without the market maker is the market participants.
Correct.
Because it's driven by the market force, right? The
Correct.
supply and demand.
Correct.
With a market maker is you just strictly follow the price matrix, right? That's what we call it. All right.
Correct. We shall cover next.
Okay, so what are the advantages of trading warrants?
Okay, so there are actually a couple of advantages here when you trade warrants, right? So let's go into the first one here. The first thing here you see is actually the share price movement versus the core warrant Supermax C37 movement here. Now this chart has been taken off last year, where the glove industry actually enjoyed quite a run there. Last year, when we see the strengthening of the US dollars, exporters like Supermax actually gained quite a bit. So the share price of Supermax actually moved from 106 to 3 ringgit and 22, as you can see on the table, the light blue table, and actually gained about 52% there in the period of early Feb to May. Yeah, and within the same period, right, warrant investors of Supermax CA37 actually made 320% within the same time frame. So this percentage gain here is actually also represented or amplified by this thing called the effective gearing. Okay, so you have this leveraging effect when you trade warrants. And 320% gain in the warrant versus the share price of 52% is actually 6.1 times in terms of effective gearing. This can be represented by the number you can see on the top right hand of your screen. So every warrant has a different effective gearing. So it depends on which warrant you trade. You need to look at this thing.
Okay, I see. So that's number one. It's a leverage effect.
This is also the most important reason why investors actually like warrants for the leveraging effect.
But likewise, if the thing did not go according to our directions,
Yes.
so our losses can also be amplified, right?
Correct. Shane is actually right. I will cover also in the later slide how it can actually work the other way. But definitely, it's actually high risk, high return product, warrants. Okay. So next advantage that for warrants trading is this: because of the leveraging effect, you don't need such a high capital to get the same kind of potential returns. Okay, the example here shown is actually using Genting Malaysia, right? You can see last year and Genting Malaysia, if you have invested 10,000 in Genting Malaysia this period within the December period, up 10%, you would have made 1,000 ringgit. Okay, whereby if you know warrants, all right, you want to invest in warrants, you don't need to fork out the same amount of money, 10,000 ringgit. You need only to fork out 2,500 ringgit to get the same kind of profit of 1,000 ringgit. And this is because also of the effective gearing. As you can see on the right hand side of the screen, the warrant here offers an effective gearing of 4 times. That's why when the share price of Genting Malaysia moved up by 10%, the warrant Genting Malaysia C43 went up by 40%. And hence, even with a lower capital, we can give you the kind of similar profit.
All right.
Okay. Now the third thing about a advantage of trading warrants is this: not only you can actually participate in the local share warrants listed on Malaysia in Bursa Malaysia can also allow you to gain exposure to foreign shares. So the example here, if you can see on your trading screen again, right? These warrants are actually quoted and traded in Ringgit Malaysia, but the mother share here is actually all shares from the Hong Kong exchange. the Bank of China, Country Garden, China Mobile, China A50, Geely Mobile here, the Geely Automobile, Hong Kong Exchange, ICBC, Tencent, and Xiaomi. These are all, you can also now trade them via the warrants listed on Bursa Malaysia.
So the movement also follow the underlying shares in Hong Kong.
Correct. So the movement also tracks the other share that is listed in Hong Kong. Okay. So the thing that we talk about that is like they say, for example, Tencent, right? Same thing. Similarly, Tencent, who is listed in Hong Kong, you can also trade Tencent C7 back then for the exposure to the share. So the share price went up by 43% during October to March, and then the warrants actually moved up by 95%. Same thing. This is also 2.2 times more than the share price movement, which is also indicated by the effective gearing ratio up there. Okay, and one thing about warrants trading, also one advantage about warrants trading is this: warrants are also already a cheap tool to trade, right? So your transaction costs for warrants are typically lower than shares. Now, if you trade warrants now, or actually for 3 years starting from 2018, this transaction cost is even lower because of the waiver of the stamp duties for 3 years starting from 2018 January all the way to at the end of 2020. So just an example on how much you could have saved is this: stamp duty costs about 0.01%, or actually 10 ringgit for every 10,000 trade that you do. So if you do a two-way trade, you will probably save about 20 ringgit there already. So if you are a day trader or if you trade very often, there's some amount to think about.
Okay.
Okay.
Yeah, so before we go to the warrants essentials, just let us launch a poll to see if you have been listening. Okay, so let me launch a poll right now. On your screen, you will see there's a poll question. So that asks you, which of the following is not an advantage to trade warrants? All right, please pick the right answer. I give you another 20 seconds. All right, is it leverage? Is it low investment outlay? Is it high transaction cost? Or is it exposure to foreign underlyings? All right, 70% of you have voted. So let me just close the poll and share the result with you. So on your screen, you see that 1% of you choose leverage, 0% of you choose, none of you choose low investment outlay, 96% of you choose high transaction cost, and 3% of you choose exposure to foreign underlying. So Kenneth, which one is the right answer?
So the right answer here, if not an advantage to trade warrants, is definitely a high transaction cost.
So 96% of you got it right.
Majority got it right. Yeah.
All right. So So for the 4% of you, you have to pay more attention in class. Okay.
And you can call me afterwards.
He will make sure that you get 100 marks after this. So right now we have talked about what are warrants, the market volatility, and the advantage of trading warrants. So can you tell us, when it comes to trading warrants, what are the 3 things that we need to master?
Okay, so now we come about the things that we need to look after. Some of you may be confused by the things that that you come across to say, like strike price, exercise ratio, different maturity, effective gearing, whatnot. But don't worry about it. The most important thing that when you come to warrant is these 3 things. It all boils down to these 3 things only. Okay. Now, first thing first is sensitivity. Second thing, effective gearing, and third thing, time value. So in short, we call it the set. So are you set? Okay, 1, 2, 3 SET. So sensitivity basically tells you how fast the warrant move. Effective gearing, how much the warrant move, and how long the warrant lasts when it comes to time value. So these 3 things is the thing that you must understand before you trade warrants. Okay, so let's move on to sensitivity, the first part of the SET. Now, as sensitivity basically tells you how quick, right, a warrant actually reacts, or how responsive a warrant reacts. And different warrant actually behave differently, in the sense that different warrant actually move in a different speed. Okay, I'm taking two examples here to give you a better understanding on what it means by this. Okay, here are two price matrix, which shows you the different warrant price, okay, in according to the different level of the underlying share price. Okay, two warrants, the share price of the underlying is the same, definitely, but for the warrant price, as you can see, there are different color to tell you, different boxes to tell you that how long the warrant price will stay before it actually changes to the next. Now, let's zoom in to the left table here, Supermax C60. Okay, if the share price was at 1 ringgit and 47 cents, okay, you were bullish and you got into the warrant, you bought the warrant itself. Okay, so you bought at 3.5 cents. On the right side of the table, you can see, right, 3.5 cents. Now, how long would it take before you can actually sell your warrant and realize a profit, right? So here you can see, if you bought at the lowest range of 3.5 cents, the warrants will have to move 5 ticks or 5 steps before you can actually sell to the next level at 4 cents before you can make a profit. Correct? So you can see here, from 1 ringgit and 47 cents on the share price have to move to 148, 149, 150, 151, 152 before your warrant will flick to the next bid price of 4 cents. Okay, these 5 steps here movement is also equivalent to a 3.4% move in the share price before the warrant will move by 14.3%. Okay, as shown in the lower table here. So if the share price move only 2% or move only 2.5%, the warrant price will not be moving. Okay, only anything above 3.4% or 3.4, the warrant will have to move 1 step, which will show a 14.3% move upside move. Okay, now this is a relatively insensitive warrant. Now, if you want something more sensitive, okay, something that moves faster, this is how it looks like. Okay, same thing. The share price is still at the same level, 147. Okay, but the warrant price here is actually 9.5, because this is a different warrant, right? This is a Supermax C65. So for you to make a profit from this warrant, you will need to wait for the warrant to move actually 3 ticks here. Is lesser than the previous 5 ticks. So the share price must move from 1.47, 1.48, 1.49, but at 1.50, you are able to already sell back your warrants and make a profit here. So these 3 steps here is actually equivalent to about 2% move in the share price, or about 5.3% move in the warrant changes. So anything above 2% already, you will see the warrant price moving and you're able to make a profit from it. So whereas the earlier example, you need to wait for it to move about 3.4%. This is actually faster. Okay.
Are there any warrants which are very sensitive? Like if the underlying move 1 tick, they also move 1 tick.
I think some people like that. Yes, there is warrants like this. But sometimes we will say that it loses the meaning of buying a warrant. Because why? When you buy warrants, you want the leverage effect. You want the effective gearing effect. So let's say in this case also, if you can see, yes, this warrant here, C65 is more sensitive, but the move here now will only make you about 5.3%, right? But whereas the earlier example, once the warrant price move, right, when there's a change in warrant price, the return is already 14.3%. So more sensitive warrants, typically the effective gearing is actually lower.
I see.
Yeah. So if you want, so it really depends on what kind of investors you are, which I will cover later on how you can actually choose your type of warrants.
Okay.
Right. So this is sensitivity. The next thing I want to talk about is actually the effective gearing. The second part to the SET, set, right? E stands for effective gearing. So basically what it does is actually like a performance multiplier here, which I covered earlier on in the benefit of trading warrants, right? Of the leveraging effect. But how much is the leveraging effect? You can actually look at the effective gearing. Now, in this example, I use FGV. It's quite recently quite hot, right? Because early of the month, when the news about the renegotiation of the ECRL, news was about FG about the package actually includes China buying more palm oil from Malaysia. So FGV price also rallied quite a bit. On the day itself, this is on the 9th April, share price was up about 2.4%, and the warrants actually move more, right? Always of the leveraging effect. So in this case, C62 actually was up by 11% and C63 up about 5% here. Now, both are also FGV warrants, but the quantum that they move is actually different. So C62 here actually moved 4.6 times of the share price movement. So share price moved 2.4, it moved 11%, right? Whereby C63 only moved 2.2 times of the share price here. So this thing that determines the multiplier here is called the effective gearing, which is the leveraging effect ratio lah. Okay. Now, this is what Shane mentioned earlier on. Now, warrants is always a high risk, high return investment. Okay? You can make a lot from it with low capital, but you can also potentially lose a lot. Now, what I meant is this, because effective gearing also works when the market is moving against you. So in this case, like MYG fell 0.6% here, relatively small change on the day, but because of the warrants effective gearing here, you see like warrants like MYG C67 losing about 4% on the same day. Okay, so one thing you need to know, right? Although you are also exposed to this kind of downside risk, one thing about warrant is that we say that warrants have the losses of warrant investment is actually capped. Now, what I meant by this is this. This is the snapshot or the share price movement taken last year before and after the general election. So as you know, the counters that is related to the previous government after the election, they tank quite a bit. Okay, due to uncertainties. So in the month of our election last year, May, MYG lost about 70% there. Okay, so by right, if you look at the effective gearing, if you remember what I said earlier, this is supposed to be the multiplier, right? 6.1 times multiplied by 70% down, you would get about 400 over% loss. But for warrants trading, there won't be a case where you face an overloss, meaning your capital, at most you will only lose your capital, nothing more than your capital. Okay, so on the upside, you get to enjoy unlimited upside, and on the downside, you are capped by the capital of the warrant. Okay, now moving on to the next, the third thing about the SET. T stand for time value. Now, all warrants have a limited lifespan, so it does not last forever. Okay, so if you can see the specs of each warrant, they have their own respective expiry dates. So because of this, a warrant has a limited lifespan, the time factor in a warrant is actually very valuable, and this time factor here, we call it the time value. Now, the moment a warrant is listed, time value is at its highest, of course, because of the remaining time to maturity is very long. But as we move closer to its expiry date and maturity date, time value actually diminishes, and not at a constant speed. In the beginning of the life of a warrant, time value actually falls slower, and as you close on to the maturity date, the time value actually drops faster, and fastest towards when you are closest or last 2 months before the expiry. Okay, so the next question is, if you hold a warrant towards the end of the maturity date, do you lose everything? Since time value will diminish and towards the end it will become zero, right? You will zero-rise. So will you lose everything? It depends. This thing is because warrant price is made out of two main components. One is intrinsic value and one is time value. Well, time value will be diminished or will be zero-rise towards the end of the lifespan. But the next thing you need to determine or need to know if you are getting back anything is based on the intrinsic value of the warrant. Okay, so when the warrant is alive, when you are trading, there's some time value to it, and towards the end expire, what's left is just your intrinsic value. And how you get this intrinsic value is simple, just your current share price, and you need to minus off the strike price here. So the differences is actually your intrinsic value. Okay, so even if time value is gone, at the end of the maturity date, your intrinsic value is 30 cents, you will get back 30 cents. Here, with the assumption of the ratio is actually 1:1. If you, so some warrants have a certain kind of conversion ratio, so you just need to divide this intrinsic value or the settlement intrinsic value by the ratio, and you know what you will get back for each of the warrants that you have on hand.
So let's say it's a 3:1. So in this case, what is the intrinsic value?
So
10 cents.
Yeah, it's correct. It's 10 cents actually. So if you have 3:1 ratio, at the end of the day, you find the intrinsic value 30 cents divided by 3. Each warrant you get back 10 cents. Yep. Okay. Okay, so we're coming back to the three things that we covered earlier on. The SET, these are the things that you need to know when you trade warrants, right? Now, these three things actually will tell you like what kind of investors you are. You need to focus on certain segment of it. Now, the first one is sensitivity, right? If you are a day trader, you like to trade in and out very fast in a single day. So something that might favor you is probably a very sensitive warrant, right? Because very quickly you can go in, take the profit and get out in the same day, right? Something less sensitive will it's very tough for you to actually make any profit from it in a single day. Now, if you are a risk taker, you like to use a small capital or very small kind of investment outlay to make a bigger kind of potential returns, then you'll be looking for something that is very high in terms of effective gearing. Okay, of course, just remember high risk, high return. Yeah, higher effective gearing, then the higher potential gain and loss. Now, the third one is, I would say, it's more suitable for speculators, but investors or speculators on news, especially if you expect something to happen in 1 month time or 2 months time, before the news to be announced, you want to trade this kind of warrants. Make sure that your warrant has enough time before it expires. As you can remember, time value will diminish over time, and it's actually fastest towards the maturity. Okay, so depending on what kind of investors you are, you pick the right warrant. Okay, now, so now you know what is warrants, what are warrants, the advantage of it, and basically the essential of it. Now, just want to share a few things, tools, so to help your warrant trading experience. Okay, first thing I want to introduce to you is this thing called the time-based stop loss. Probably a lot of you heard about stop loss, about cutting your losses. But time-based stop loss is actually something you don't come across quite often. It's what I used when I trade warrant last time. Okay, so this is how it is used. Okay, now imagine if you are entering a trade. There's only 3 possible scenarios that you will end up with. Now, first scenario, the black box on your left. Yeah, price move in your favor. Of course, this is the happiest scenario, right? You want to just manage your profit, just determine when you want to exit and so on and so forth. The second scenario, if price move against you, okay, you are making losses. So the next sensible thing to do is actually cut loss. So why? Because they said you don't want to wait for the full loss if the momentum is against you. It makes sense. And the third scenario is that nothing happens. Okay, when you are when you are, let's say you are bullish and you enter into a trade, but after a while nothing really happens. So here, what happens is if the trade doesn't pan out, it doesn't happen, right? If it doesn't happen on what you expect it to be, so you might be wrong. So here, for me as a trader back then, I used this thing called time-based stop loss to say that if nothing happens by the 8 candlestick, when last time when I trade, I use charts, right? So 8 candlestick, I will actually cut my losses. I will exit the trade, and then I will re-strategize and replan my next entry. So this is something very relevant, especially when it comes to warrant trading, because time value actually falls, right, over time. So this is something that you may be able to use when you trade them. Okay, next thing is these are notification on new warrant listing expiries, right? I think a couple of issuers out there actually send newsletters out to warrant investors. So what happened is that, as I said, right, time value is actually quite an important factor in warrants trading, right? Part of your SET. Now, new warrants, the good thing about new warrant listing is that you have a lot of time value, right? But if you list a new warrant, the time value is the highest then. So in a way, time value actually falls the slowest when you are actually trading or investing in a new warrant. So it's really good to know what are the latest listing out there in the market. And also sometimes you even have IPO stocks, right? That warrants haven't listed before. So you will have able to get the first-hand news on all these new warrants. And also warrants expiring. This because sometimes some investors may forget about their warrants holding. So what we do, or what basically some issuers do, actually they actually remind investors to say that, hey, there are actually warrants expiring soon. So make sure that these are not in your hands, and hopefully you haven't forgotten about your position. Okay, these are very good things to have that help you trade and open up your options in the warrant trading. And next thing is actually also day to day. Some issuers also actually send out newsletters to say that today this is hot in the news, right? They say to BC Toto is hot in the news because of certain kind of news. Warrant issuers usually pair relevant warrant to this kind of news, so for you to consider. So straight away you know something is going on, and if you are keen, you can actually consider the warrants. And sometimes they also put in like research from their in-house team, their other colleagues, right, to say that if this research shows some bullish signal in the stock, so something that you may consider is actually the warrants as well. Okay, these are all very good thing, and it's typically, I think most of them are actually free now. All this will come in handy for you. Of course, on the left hand side is the price matrix that I used to show earlier on how sensitivity works, and this will actually tell you the warrant price that is. So we make it very transparent in terms of warrants trading, and in terms of the sensitivity, you are able to tell. And there are always educational pieces by issuers out there to actually to educate investors more about warrants from time to time. Of course, for foreign listing warrants also, through all this newsletter, you are able to pick up news and what is really hot in even for other stocks in other country. Okay, so for those who are actually interested to trade on foreign counter warrants like your Xiaomi or Tencent or Geely, just need to make sure one thing, that the trading hours or the market making hours is actually a bit different from Bursa normal usual hours, because the underlying that is listed in Hong Kong actually starts later and ends earlier. So it starts at 9:30 as compared to Malaysian stock market, they start at 9 and they end actually at 4 p.m. Whereby Malaysia ends at actually about 5 p.m. Okay. Okay, so for those who are also still very keen on learning more apart from warrants, if you want to learn anything more, you can always head on to Bursa Marketplace, where they have other kind of educational series for you to always click on. I think most of them are free, I think. Yeah.
Yeah, for the if organized by Bursa Malaysia, most seminar or webinar are free or only of minimal cost lah.
Then
Okay.
yeah, so
And,
better.
yeah, for example, you can enroll for the next one, which is BMD Educational Futures webinar happening 2 days later. You can go to Bursa Marketplace to register for our futures webinar. So that's one. And on Bursa Marketplace, they also have a warrant screener. Am I right?
Yes.
Yeah, they also have a warrant screener. You can use their warrant screener on Bursa Marketplace.
Yeah, you can always check out Bursa Marketplace website to see on all these. It's a very informative website, and more than that, okay. So they also have other educational content for you if you want to learn more about the stock market, about warrants. There's other interesting topics just for you to find out.
Yeah, and they also have educational content on warrants. You see on your screen, there's warrants articles, and you can also learn more from Bursa Marketplace. Right. So yeah, today we have come to the Q&A sessions because I expect there are already a lot of questions on my screen right now.
Okay.
So yeah, before we go to a Q&A session, let me launch another poll. Okay, so on your screen right now, please tell us which of the following codes is a call warrant. All right, please just check whether you are paying attention or not. Which of the following codes is a call warrant? Is it C8, is it WB, or is it HA?
20 seconds. Also, is it?
Give you another 10 seconds. So while you're answering the poll, if any questions, please write in the questions box. So our speaker, Kenneth, will help to answer your questions. And remember, write your questions in full sentences, okay? Because if you write in shorthand, maybe we couldn't understand you. All right, so over 70% of you have voted. Let me just close and share the poll result with you. 89% of you picked number one, C8, 9% of you picked WB, and 3% of you picked HA. So, Kenneth, what is the right answer?
The right answer is C8.
CA. So majority of you got it right. So the other maybe 12% of you need to pay more attention in class. So what is WB?
Okay, so W is actually company warrants. So just remember anything to do with W is actually for company warrants, and HA is actually, or anything to start with H is actually put warrants.
So HA is a put warrant. So all right, are there many put warrants in Malaysia?
There's not a lot of put warrants in Malaysia. So majority is actually still call warrants here.
Yeah, but there are there are
Yeah,
put
they are,
warrants.
they
Just
are.
that the majority are still the call warrants.
Correct.
Also the company warrants.
Right.
All right, so let's go to the question and answer sessions. All right, so on my screen right now, the first question is, what is the difference between company warrants and rights issues?
This is not in my expertise. I think this one we can take it further. I take it with someone else.
Oh, okay. But company warrants and rights issue are both a channel for them to raise fund.
Yeah.
Okay, but depending on which what is the reason they want to issue warrants and what is the reason they want to issue rights issue. Okay, so the next question is, what tactics are recommended to trade HSI warrants? Okay, what area or aspect HSI should I look into?
What tactics are recommended to
Trade
trade?
the Hang Seng Index warrants. So when someone trade Hang Seng warrants, what are things aspect that they should look at?
Okay, I mean, I think based on my experience, Hang Seng bonds are very volatile. So it's very important for you to know your stop loss. Where is your cut loss point? The moment you enter the trade, you must know clearly where's your stop loss point, because it can move a lot in a single day. And even if you hold overnight or hold over the week, you can imagine the movement or the changes in the warrant price. I think stop loss or your cut loss point is very important.
Okay, so now for company warrants, if we buy the warrants, how can it be converted to actual shares? So this is the question.
Okay, company warrants is not into this topic, so I'm focused on structured warrants. But on company warrants, if you really want, you can actually ask your broker. They will know how to convert them for you. Yeah, you need to fill out some forms. You need to pay the subscription fees and all.
Okay, so on your so just now you mentioned about market maker, right, Kenneth? So can you tell us who are the market makers?
Okay, so in Malaysia there are, I think, six market makers or six warrant issuers now. RHB, Maybank, CIMB, Kenanga, Macquarie, and MBank. Six of them are warrant issuers.
So yeah, can you tell us what are issuers and what are market makers?
Okay.
What are the roles?
Okay, my bad. So basically, the person who created this product or these warrants are the issuers. They issue this product, and more often than not, the issuers themselves are the market makers. They provide the liquidity to their warrants that they issue. So issuers and market makers are the same person in so far in all cases.
So in other words, when you buy warrants, you buy from the issuer, and when you sell warrant, you also sell to the issuer.
Correct.
Okay, so that's what it means.
Yeah, most of the time.
So they are the one who give the liquidity, they provide the liquidity to the market so that there are people buying, you can buy from and you can sell to.
Correct.
Okay, so that is what it means by market maker. So just remember, the issuers themselves are the market makers. Okay.
Yep.
Yeah, the market makers for their own warrants that they issue.
Correct.
Okay.
Correct.
And just remember, structured warrants are issued by investment banks, while company warrants are issued by the company itself.
Correct.
Okay. So the next question is, for structured warrants, are the brokerage fees similar to company shares? Brokerage fee.
Yes.
Brokerage fee for
Yes, brokerage fees is the same.
So if I buy structured warrants, I pay the same amount of fee when I buy shares.
Yeah.
Okay, if it's 0.42%, it's 0.42%.
Correct.
Okay, so the fee is similar. So the next question is, the structured warrants have a limited supply like shares in the company?
Okay. Yes. Yeah. Structured warrants also has limited inventory, as per se. Yes. When we choose to issue a warrant out there, there is already a specific or limited amount of that warrant in the market. So to say that if I issue Supermax C60, upfront you will know how many Supermax C60 is in the market now, or it's actually created. So usually it's about 40 to 60 million units per warrant.
60 to
40 to 60 million units of
usually
issuer
will pick this amount. Why is this 60 to 40? Why is this?
Okay, so why this amount is because we need to, when we apply to Bursa for this kind of creation and listing, we need to have a minimum amount of 5 million worth of warrants when we create them. So based on calculation and based on legacy, usually typically issuers will set their amount about 40 to 50 million as a base, and then they will work around this amount.
All right.
Units.
I actually learned before that when the structured warrants is fully subscribed, that means you finish selling.
Okay.
That scenario is when it gets a bit tricky, right?
Yes.
Yeah. Can you tell us what we need to be careful of when the structured warrants are fully subscribed?
Okay, so it's good that Shane brought this up. So as I said, so your warrants has a limited kind of inventory. Let's say 40 million, for example. So 40 million units after selling the market, all of this 40 million, what happened is that the issuers or the market makers won't have enough warrant to provide liquidity anymore. So after the point of selling out their warrants, the bid and offer quotes and prices are actually more or less determined by the investors themselves, because the warrant issuers no longer has enough quantity or liquidity to actually provide liquidity already. Everything is driven by the market. It's more or less the demand supply of the market already.
Okay. So does that mean the risk is higher when it is fully subscribed?
So yes, so the risk is actually higher if you buy into this kind of funds. Why? Because if it's purely driven by this demand and supply, what happens is there's a risk that this kind of warrants may be actually pushed up or may be inflated by other investors in the market. So say for a market maker, I think I always market make at a fair price, right? I always provide my bid and offer based on a fair price. If my fair price is at 12 cents today, right? But because I don't have the quantity, I cannot market make at 12 cents. The investors outside may be pushing up this warrant price to say 14 or 15 cents, and they will be trading around that region, whereby the investor, the issuer or the market maker is only actually providing a fair price at 12 cents. So if you come in late in this scenario, you'll be buying at a price that is way above the fair price of the issuer at the 15 cents. As compared if you buy directly from me earlier on, it would have been only 12 cents. So when it comes to this kind of scenario, when you see a warrant, if you notice a warrant is sold out, you are better off looking at other warrants in the market, because there are always another one out there for you. There are 600 over warrants as we speak now.
So after the shares are fully taken up by the investor, but if the investor want to sell it back to you, will you buy it back? Since you're a market maker.
So even if the one has been fully sold out, what happens is that the issuer cannot provide the offer side of the liquidity. But what happens is a good issuer always maintain the bid side of the liquidity.
Okay.
So they are willing to always buy back at the fair price still. No worries. Just that they can't sell anymore.
Yeah. So the bid price is real, but the offer price is provided by the investor themselves, by the market.
Yeah, but the bid price may be buried below the market price. So
because people already push it out.
Yes, correct.
Okay.
So that's the risk that if you go in late to trade
I
that kind of
see.
warrant.
So how do we know if a warrant is already fully subscribed?
Okay, so I think for most issuers, they will actually make announcement, or they will try to send out emails, or like through newsletter, they will remind you to say that this certain warrant has been sold out, so you can consider other warrants.
So the next question is: does implied effective gearing work if the warrants are held over a longer period of time?
Okay. Also effective gearing.
Will it still maintain the same effective gearing if I buy it whole?
Yeah. Effective gearing is always there. It's just that it may vary according to time and according to different level of the mother share. So at different point, a different point of investment horizon, effective gearing will be different. So just say if your share price is now higher than before, have moved up quite a bit, your effective gearing typically should be actually smaller. So whereby if the share price is actually trading lower than before, fall quite a bit, your current effective gearing should be actually higher than earlier. So different point of time, different share level, you have a different kind of effective gearing.
So the effective gearing is only an estimate, like it may not be that accurate. Right?
It will be at the point of time that is the effective gearing. But tomorrow, if the share price changes, then you have another effective gearing.
Also, effective gearing keep changing.
Correct.
All right.
Correct.
Based on the how much is the underlying and what
Correct.
is the warrant price.
Correct.
Okay, so now is warrants is warrant an option?
Is warrant an option? Yes, I would say warrant is like an option, but warrant is like an option broken down into a smaller piece, and it's actually traded on the exchange, whereby sometimes options are usually traded more, usually refers to a more expensive, and sometimes may not even be exchange traded. They may be options done OTC, off market trading. So for warrants is they behave somewhat similar to option, but they are actually broken down into smaller pieces using the conversion ratio.
Okay. So, do you advise retail investor to hold warrants on a longer time frame?
So whether to hold a longer time frame is actually definitely up to you and depends on your strategy. But typically, it shouldn't be too long. It always, at the end of the day, it's still a short-term investment tool. You need to limit your holding period. I think
So you are saying that warrants should not be for a long period.
Yeah, it's definitely not for a buy and hold kind of strategy. So if you adore Warren Buffett and you want to practice his kind of trading strategy, it's definitely not via using warrants.
Also, not for company warrants.
Company warrants is a bit different. It's a bit tricky here. It actually behaves like a core warrant, structured warrant, but because the lifespan of it is actually longer, it lasts from 2 to 5 years. So your time value is actually more there. Yeah.
So your SET will also work on company warrants, right?
But it's similar, but the thing is with SET is that because you have a lot of options in a lot of variety in the market, you can use SET to actually help you filter. But for company warrants, typically there's only 1 or 2 company warrants on the same
Mothership.
mothership. Nothing much for you to choose from.
Okay. Now the next question is a bit more interesting. So if for a company warrants from foreign market, let's say Hong Kong, okay, if after expiry, am I still able to convert to mother share without a foreign trading account?
For company warrant, I'm not the expert for in this area, so I can't really share here.
Oh, okay. Like
Maybe Shin have some experience to
no,
share.
no, I never traded.
Company warrants for overseas, I don't really know.
Okay, all right. Okay, let me see. Is there a centralized platform for us to observe warrant metrics?
No, unfortunately. Typically, the warrant matrix is only provided by the issuer themselves on their own warrants. So only the issuers who issued that warrant itself will have the matrix on the warrant. So different issuers have different matrix for their own one.
So there's none, so they need to check with. So they need to know like if you want to buy, let's say Supermax C60, you need to check with who is the issuer of C60 and
you need to
contact
check
them.
Yeah,
And they get a price matrix. Okay. Yeah. Yeah, for the question just now, I guess you need to have a foreign trading account before you can hold the shares. You definitely need to have a foreign trading account.
Yeah, definitely. I think so.
Okay. So how do we get the information to understand the S part of the warrants? That's the next question.
Okay, so what you can do is actually you can actually contact the issuer to ask them about the if there's a price matrix, and they should be able to share with you.
So the sensitivity comes from understanding the price in the price metric, right?
Correct.
So to know the sensitivity, you must definitely get the price metric from the issuer.
Yeah.
So that is for the structured warrants. For company warrants, no price metrics.
No price matrix.
Company warrants, the sensitivity is determined by the market.
The market. So it's all demand supply play out there.
Yeah. So can you help us compare the relationship between sensitivity and effective gearing?
Okay, so it's actually 2 different things. So as I mentioned before, if you are looking for something that is sensitive, usually the payoff is actually effective gearing. So if you want something more sensitive, usually the effective gearing is lower. So if you want something with high effective gearing, you have to probably bear with something that is less sensitive.
So there's no very sensitive and very effective gearing.
I haven't come across before.
Yeah, you should decide.
I haven't come across before. Let me design something like this if I can.
So is there a website that lists all the warrants by different issuers and maybe the expiry date for us to do comparison?
Yes, I think most of the issuers have their own warrant website, but they will also include warrants from other issuers as well for you to make comparison.
Okay. So the next question is, if a warrant comes to expiry date, will it be automatically cash settled? If it's automatically cash settled, will brokerage fee be charged like when we sell the warrants?
Okay. Okay. So for structured warrants, most cases it will be cash settle. I say okay, so far all it will be cash settle. So because it's cash settle, there will be no more selling in the market, so there won't be any brokerage fees charged. But sometimes some issues may charge you on the exercise fee, but it's very minimal. Typically, I think point one, no, I think 0.3%, 0.3%, or else it's free also. There's no brokerage fees charge. No worries.
Because you're not selling the warrants.
Yeah.
So if you let it wait until the expiry date, you will only be charged the maybe conversion fee lah. Huh?
Correct.
All right. So the next question is, what time frame would you use when you mention about 8 candlestick as like time-based stop loss?
Okay, this one is more to trading kind of thing, but don't mind sharing. Back then, for Malaysian stocks, I use hourly chart. So it's actually after 8 hours for cut loss.
8 hours, you only trade intraday lah. Huh?
Yeah, intraday. No, intraday can be overnight
that's right.
also.
Yeah, overnight. Okay.
Yeah, I'll trade overnight.
Hourly, maybe one day only 6. 8 hours should be the next day.
Correct.
Okay.
Yeah.
Okay. What should we take note of if you want to use put warrant for hedging purpose?
Put warrant for hedging purposes. Of course, you need to consider if that is a good hedge. Okay, so for what I'm trying to say that is sometimes there will be a basis risk if your hedge is not matching the things that you want to cover. So it's just say if you want to say buy a put warrant on KLCI to hedge for a certain portfolio of Malaysian shares that you have, you need to first determine how much relationship of your portfolio of these Malaysian shares as compared to the KLCI index. So if there is a difference in terms of basis, then your risk of mismatching in terms of hedging will be there.
Okay. Now, the next question, is it possible to sell warrants like in the US market, we can sell and buy?
Oh, I see. No. So in Malaysia, it's only for buying. For retails, it's just only one-sided buying. They can't really sell. I mean, they can't really issue warrants. I think that's the question. Yeah, I think that's the question. Yeah, they want to write warrants. Yeah,
unless you become investment banks. You can't issue. Okay. So, okay, what is your minimum? What's the recommended minimum investment outlay if you want to invest into one warrant?
Oh, I think I can't really recommend this because it really depends on your risk appetite. I think it really is very different from one to another.
So can you tell us what do you actually mean by strike price and what do you actually mean by exercise price?
Okay, so the strike price and exercise price is actually the similar thing. It's actually a similar thing. Okay, both are actually just both is actually to tell you that at the end of maturity, that is the trigger point to see that whether I get something back. Okay, and that of course that will play a part in determining your warrant behavior and character also, as I mentioned but all those will be categorized under the SET lah.
Okay. So why are there warrants with the code P?
P is actually not
Warrants.
Not warrants. They are actually preference shares. Just for you to.
Yeah. So if you see something -PA,
these are preference shares.
These are preference shares.
Not
these
warrants.
are not warrants.
Yeah, not warrants. So
these are not put warrants.
Not put warrants.
Put warrants start with H. Okay.
Correct.
So P is preference shares. Okay, they are actually shares. How do we calculate effective gearing? So that's the next question.
Okay. Okay, so generally all these calculation of warrant pricing and all these terms are actually done via a financial calculator. But if you want to break down the formula for effective gearing, it's actually the gearing of the warrant multiplied by the delta of the warrant, which I did not cover here, but it's something that you can actually read up on. Delta multiplied by gearing, and that you will get your effective gearing.
Okay, so how is effective gearing and gearing different?
Excuse me. So gearing is actually a very simple kind of calculation. It's just that your warrant price compares to your share price. how many times cheaper than the share price. That is just your gearing. So say if the share price is 10 ringgit, this warrant option price is 1 ringgit, your gearing is actually 10 times.
So you take the share price divided by the warrant price,
Correct.
and maybe times the conversion.
Yes,
Correct.
he's
Yeah.
right. Then you will get your gearing ready.
So if your share price is 5, and the warrants price, let's say, is 20 cent, and then the warrants is 5, conversion is 5 to 1, so you take 20 cent times 5, you get 1 ringgit, and then you take 5 ringgit of the mother share divided by 1 ringgit worth of
Warrants.
warrants, which
Yes.
is 5
5 times. And that's your gearing.
That's gearing. Okay, but
Correct.
effective gearing, you use delta,
Yeah,
which is
delta.
a Greek symbol,
Good symbol.
which is harder to understand. Okay.
Yeah.
So the next question is, what is implied volatility and how we can use it in trading warrants?
Okay, so to make it simple for you to understand, the implied volatility is just like your PE in shares. If you trade shares, you may come across these terms called the PE ratio. So which they tell you basically on how expensive or cheap this instrument is. So you use it to compare with your peers. So for warrants, it's the same. Every warrants with the same underlying has their own implied volatility. So the lower the implied vol, whether it's a call or put, the cheaper the warrant is. So the higher the implied vol, the more expensive this warrant is as compared to the others.
Yeah.
Okay, right, very simple.
Like
very clear cut.
warrants are like warrants are like options, are like insurance. So the higher the risk, the more expensive is the insurance.
Correct.
Yeah.
Yeah, it's correct.
So now the next question is, let's say if I buy company warrants, can I attend AGM?
If you buy company warrants,
Can I attend AGM?
this one, I think for AGM not yet.
Cannot.
I think it's for shares, only if you have shares.
Yeah, correct. The answer is you cannot attend a
Ah.
company AGM if you only buy company warrants. Okay, you need to buy the mother
But they're
share.
holding the mother shares, yes.
Now, the next question: if the sensitivity is high, sensitivity of the warrants is high, should I just consider buying the mother share? Why I need to buy warrants? So that's the question.
I see. So despite the sensitivity, even if you buy a warrant that is very high in terms of sensitivity, there will be still some form of effective gearing there, though lesser, but there will be still some form of effective gearing. So it still allows you to leverage in a sense. So if you don't want to leverage, you want to go straight or outright purchase the mother share, then also it's up to you.
Okay, can you explain more about intrinsic value calculation at the settlement time?
Okay. So as I said, we focus more on core warrants here. Yeah. So as long as your share price is above the strike price, there will be an intrinsic value. Okay. But towards the end of the maturity of the warrants, this share price is actually called, we use this thing called the settlement price, which is actually the averages of the closing for usually 5 days. Typically, issuers use that 5 days average of the closing price for the share. That will be your share price used to calculate between the differences between the settlement price and the strike price to determine the intrinsic value.
Okay. The next question is warrant as volatile as in the currency market?
Currency market. I'm not an expert in the currency market, but through friends, through friends who trade the forex market, I think on average the volatility of to most of the pairs are only within 6% to 8% probably. That's the volatility of your forex. But as compared to warrants of shares, you see 30%, 40%, 50%, 60%. It's actually very volatile.
Okay. So the next question is, how do we identify whether the warrants is Sharia compliant or not?
Okay, so because warrants are derivative, so they are not Sharia compliant.
Okay. Okay. All right. Next question is: can you explain about premium percentage?
Okay, premium. Okay, premium. Okay, so basically, premium percentage. It's actually, in a more layman term, it's actually if you purchase the warrant now, this percentage actually tells you how much more the share price must move and end at maturity before you can break even. That is actually what the premium percentage tells you.
So like if the premium percentage 10%, the warrant must move 10%.
The share price, the mother share must move 10% before you can actually break even. That is actually premium.
Okay, let me give you a scenario. I just thought of it.
Okay.
Will I, if I come across a warrant where if I, let's say, it's in the money warrant, let's say the share price, underlying share price is 5 ringgit, the exercise price is 450, the
Okay.
warrant sell for 40 cents.
The warrant discount.
Yeah,
So
it's no
discount.
premium. There's no premium.
There's premium. Yeah. Okay.
Will that happen in Malaysia?
In Malaysia, yes, it happens.
It happens, really.
Sometimes
There's
it happens.
arbitrage, right?
So some investors will think that that is very attractive because it's actually below the intrinsic value. There's no premium to it. It's actually trading at discount. But still bear in mind, if you buy the warrant at discount, it can be even, you will see even further discount. That is the potential risk that you are facing.
Okay, wait, I don't really get it because you see, it is trading at discount, right? I can immediately sell my mother share at 5 ringgit per share. And then let's say conversion is 1-to-1. I sell 5 ringgit per share and buy the warrants at 40 cents and then exercise it to buy the stock at 450. I make 10 cents, right? I mean, it's a risk-free trade.
Because
right?
there's no conversion to share. So for structured warrants, there's no conversion to mother share. So you can't really arbitrage using that method.
But company warrants, it can happen.
Company warrants, I think so. Yeah, I think so.
Okay.
It probably can happen. Yeah.
Okay, since you touched about premium, let's ask about discount. Okay. Okay. Is it positive to have? So is it possible to have negative effective gearing?
No, because effective gearing is actually the same for even call or put warrants. Don't have a negative effective gearing. It's always positive.
Okay.
Yeah.
Is using technical analysis useful in trading warrants or fundamental analysis?
Based on my experience, I don't know how, but you can't really chart on warrants because, as I said, warrants pricing are always is determined by the market maker of the fair price, right? So it's not really by demand and supply or volume as per se. So always, if you want to chart, if you want to do any study, fundamental, that will be on the mother share, and then you choose a warrant to actually leverage on it. That's how you go about it.
Okay. So right now, let's say I want to buy Supermax, and there's so many Supermax warrants out there. So the question is, how do we know which warrant to go for?
So I would say you have to first choose, or typically some people have their favorite issuers they are used to. Let's say if they're used to, let's say RHB per se. So from RHB, they can find out really what are the warrants on Supermax that is listed by RHB. And then within the few that RHB has to offer, then you can choose in terms of effective gearing, in terms of your time value, in terms of your sensitivity, like I mentioned earlier on, your SET.
Okay. And if I may add to that, is that you may actually use warrant screener. Okay, go to I think KLSE has a warrant screener, Bursa Marketplace has a warrant screener. You can use the warrant screener to find the underlying, let's say Supermax. You just write Supermax and then you screen all the warrants available on Supermax, and then you see if you are that one longer time to maturity, you just strike out those that are closer to the expiry date. And then if you're the one that like higher effective gearing, then you go for the one that have high effective gearing. So you just need to find a screener.
Correct. Yeah.
Okay, and then you just list out the warrants available on the screen. Just strike out those that don't fulfill the criteria, and then maybe you see which warrant has a higher conversion premium. Then maybe those that have 20% conversion premium, you don't really want it.
Yeah.
Then you just strike it out. Okay, so it all ultimately it all depends on you lah. From what I'm saying is that you need to see whether are you able to take up so much risk. Then if you're able to take up so much risk, you go for higher
Effective gearing.
higher effective gearing.
Correct.
Yeah. So if you can't take so much risk, then you go for low effective. But for in terms of time value, basically we all want a longer time value. Nobody wants a shorter time value kind of.
Some people go for
Really?
shorter time value because the shorter time value, your effective gearing is higher.
I see. So I'm wrong on that. I'm wrong on that. Oh, okay.
Some people actually prefer that you can't say for sure lah.
Oh,
Yeah.
okay.
Yeah.
So that's another way lah for you to find out which warrant is suitable for you, because I know some C60. Okay, there are a lot of warrants on the market, traded on the market.
Yeah.
All right. So let us do maybe one last questions. Let me see. There's still so many questions on the board. Okay. If I okay, let me see. Can an issuer manipulate the share price?
Do the issuer have the capability? Maybe can. The price. This price is share price or warrant price? Yeah.
Oh yeah, I mean, I think what it means is warrant price.
Warrant price.
Yeah.
I think most issuer wouldn't do that. Okay, so if you ask if they have the capability, I think maybe yes, because at the end of the day, they are the one who provide the prices. But will they do that? I think no issuers will want to do that, because SC and Bursa actually monitors the issuers very tightly and very stringently.
Okay, so if I buy a company warrant, will I enjoy a dividend as per issued to the shareholder?
No. So if you buy warrants, you will not enjoy the dividends from the shares. So what happens is that when you buy the warrants, all these dividends or from the mother share has been priced into the warrant itself.
Okay, so now let's do the last question. So how can retail investor win in the stock market if issuer and the market maker are the same entity?
I think he's thinking that the issuer always trades against the investors. So that is not the case. So in the best case scenario, if the share markets goes up, both can be winning from this kind of scenario. So if you bought a call warrant, if share price went up, you made from the call warrant, and for the issuer, they would have already covered their risk of selling this call warrant by buying the mother share. So they would have also made from the mother share if the share price has appreciated in the bullish market.
Okay, so that could be win-win also lah.
Win-win.
Not only you are as a market maker, you are always on the opposite directions.
Yeah,
Okay.
we are always on the same side.
All right, so now we have come to the end of our question and answer session. I think we are not able to answer all the questions because there are still so many questions on my screen right now. But but I guess we really have a very long and fruitful question and answer session. What do you think?
I think it's very interesting. So many questions that we saw.
All right, so if you enjoy our webinar organized by Bursa Malaysia, managed by LifeChamp, you can also join our next webinar where we are going to talk about 7 golden rules of investment on how we can make stock market a winning investment market for you. Okay, how to win in the stock market by following these 7 golden rules. Okay, it happens on the 7th of May 2019, which is the first Tuesday of the month. This is more beginner kind of principles that we must subscribe to. Please register at the link that I'm sharing with you via the chat group right now. Okay, if you want to join our next webinar, which talk about 7 golden rules of investment by a renowned speaker, PC Wong, who is also an author of 2 best-selling books, please join our next webinar, 7 golden rules of investment, which I've just given you the registration link at our chat box. All right. So with that, thank you everybody for tuning in today, and thank you so much, Kenneth.
Thank you, Shane,
for
Thank
joining
you, Shane.
me for this live broadcast of this webinar. And hope that you have learned as much as me in this going tactical with warrants webinar. And hope to see you all again in our next webinar. All right. Have a pleasant rest of the day.
Have a good evening. Bye.
Bye bye.